All right, gang. Happy Thursday. How's everyone doing today? Give me a second. Live rumors spinning wheel of death is upon us. There we go. Actually, remember to start the recording today, so I don't have to use the backup. But welcome. Happy Thursday, guys. Welcome back to the live trading room. How are you guys doing today? Welcome, YouTube, Facebook, Twitter, TradingView, somewhere else, most likely. Chris says, hey, coach, hope your voice is getting better. If not, don't forget the whiskey. And if it's doing fine, still don't forget the whiskey. It's 5 o'clock somewhere. Yeah, you know what? I made sure to take care of my voice last night, Chris. We drank a lot of whiskey, watched a lot of Aquaman, took Orsi's advice, you and Orsi's advice. Worked like a charm. But welcome, guys. Yeah, voice is doing better. Wish my trades were doing better. Actually, I didn't have bad yesterday. I had a one for two yesterday. The trade of the week from today's Thursday, Tuesday, I guess it was. All these days run together. Aussie Canada did not work. We're looking at a bear flag for a big breakout home run trade. Swung big, not big risk wise, but we just going with the whole home run reference. Swung and missed. Hey TJ. Which happens. Ended up catching a small Gartley on dollar yen, which eased some of the pain, but that was probably the last home run trade of the year, as my trading is basically done after this week. Today, Rain says anyone born after 2008 in New Zealand will not be able to buy cigarettes or tobacco products in their lifetime. Wow, look at that. Today, I had a few things on my radar. I was trying to decide which I wanted to use for today's trade of the day, because none of them are great. And I wanted to go with the pound Aussie. So we're going to head to the pound Aussie. And actually, man, this trading idea may be out of the water. So this may be a bad one. Let me just take a quick look at this. I do my analysis, remember, 6 o'clock in the morning. So things may change here. Well, we'll make the most out of it regardless. I was actually looking for a low and tight flag. So I'll walk you through the analysis and we'll talk about how it still could happen here. But pound Aussie on the daily. We have a few things happening here. We have had a lot of weakness in the pound lately. A lot of concerns over there. We've had some strength in the Aussie, which is weird because this whole Omicron thing is causing concerns in some places, but also many of the concerns are kind of lightening in other places. So typically with the kind of the whole COVID thing, which we've been going through over the last few years, is you see kind of a risk on, risk off across the board, where it's either a mass concern or a mass kind of like, Now it's kind of in certain places we're concerned, in certain places we're not concerned, which really kind of throws a monkey wrench into things. But we've been seeing pound weakness because of that. We've been seeing Aussie strength because of that as well. And we had a nice little rundown. We're following it up with a little bit of a retracement. In general, we're sandwiched between two levels of structure, right? So you can see, I'm here on the daily, by the way, we had a previous level of consolidation right here, or she said, predicted a bearish move after the inside bar at the top right here, Orsi. Beautiful, right? At structure, positive bar. Very nice prediction there. And then we have another inside level of structure here, which we've just come down to. You see we have this little consolidation. Now, what we had earlier on the lower time frame was actually setting up to look like, it looked like a double top, but I thought it could be a low and tight flag. And I was predicting that we could see a continued breakout and really test the bottom of this move. And that just may not be the case anymore. And it brings up a good lesson, and why I don't want to ditch it is because it brings up a great lesson in trading, where it's your trading analysis has to be fluid, right? One of the major problems I see with traders, and I'll save this for the book, the top blank trading problems I've seen in my career, is falling in love with the setup. Have you guys ever fell in love? Anyone ever fell in love? Not with Aquaman or Sheesh. right? You ever fall in love with your setup? We're going down a whole different path here, Chris. I thought I fell in love, and then I found out. But it's common, right? Because especially as newer traders, we're really excited about stuff, right? This whole charting thing is new, analysis is new. Usually we're pretty bad at it to begin with, and then when we get good, it's a massive accomplishment, right? It's a massive accomplishment when we get good at it because it feels like we've mastered a skill. Again, it's the same thing as, like, for me, it's building, right? I'm not good at building stuff. So when I build something and it doesn't break right away, I'm excited. I feel accomplished. I walk around with my head held high, and I start making sure it's in every conversation. Let me tell you about the new raised garden, right? Because I want to brag about it. You get excited, you take pride in it. And we do the same thing as traders. The problem with trading is, right, we go through this process, IPDE, identify, predict, decide, execute. We're actually going to do a nice coffee break episode on that today at 10 o'clock. Me and Jason are back, 10 o'clock New York. But you go through this process, identify, predict, meaning you analyze the market, you predict what's going to happen next. And in that prediction, someone on YouTube said, yeah, it can't be marrying these setups. That is 100% true, right? You got to do your homework first. You predict what's going to happen, and then you start running through the process in your head, right? Am I right, guys? You start running through, okay, this is my directional bias. This is where I think we're going to go. And then you start running through the process. Okay, if we come to this, then I look for double top. If I get double top, then I get that, right? You're rehearsing your trade. And that is what you're supposed to do as a trader. You're supposed to rehearse your trade. That way you're prepared if, not when, if it happens. And you don't panic. And that's the whole stress versus distress thing, where trading is always going to be stressful. That's the normal, but as long as you're not in distress and you don't make any weird mistakes, right? So you run through this opportunity. For anything like me, you run through these opportunities in your head over and over again, right? Okay, 184, this, boom, that, need that, R side, this. You double check, you triple check, right? You saw the picture I shared on social the other day of my old trading desk with my rules behind the computer, right? You're checking them off, right? Boom, 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 boom. And then the hard part, you're waiting. So you're waiting. You come back the next day, maybe you're a swing trader, right? And then all of a sudden, something has been violated, right? Now, this is where we go back to pros versus Joes, right? Pros see that violation. They take the paper and just, no, all right, whatever, violate it, tear it up, start over, right click, erase all. That's my favorite combo. Right click, erase all drawing, right? But if you're in love with that setup, what do? You want it to work so bad because you want to feel that accomplishment that you tend to ignore it. You start doing, still, right? You force it, and you can get into a lot of trouble. And again, that's one of the, if you guys are new, one of the most important piece of advice I can give you is this, right? Most traders don't have a problem finding winning trades. The biggest problem in trading is giving it back. And it is the amount of small mistakes compounded that typically destroy traders. That's it. It really isn't. It's not really a skill thing. It's more of a discipline thing. And I challenge you, if you're struggling, if you're someone that's break even or struggling, go back to your trade setups and do a review and look at how many good trades versus bad trades you had, or how many times you made mistakes. And I guarantee if you start removing some of those mistakes, your P&L looks a lot different. That was the biggest turnaround in my trading, where I was blaming everybody for everything, right? Broker, teacher, setup, weather, whatever, unicorn, right? The squirrel outside my window, everyone was getting blamed. And I took a month and I reviewed all my trade setups, and I did an A/B test, right? I said, what would my perfect trading scenario look like if I only traded the trades that I was supposed to trade in the way I was supposed to trade it? And I compared that to my actual results. And I said, holy crap, I just need to stop doing dumb stuff. And that's when I came with the whole thing where it's like, I just need to make less mistakes. And then I changed my whole focus, my whole goal for that next year was to make one less mistake a month. So if I was making 20 mistakes a month, the next month, the goal was to make 19 and slowly just destroy that, like addition by subtraction. But you can't fall in love. You got to know when to let it go. So I'm looking at this morning, and I'm down on the 4 hour, right? And before this recent candle wasn't as high as it was, and there's still time, but we're seeing this consolidation, right, Orsi? You got a few inside bars in there as well. I think one inside bar, that red boy. We're seeing this consolidation, right? So the market is taking a breather. It's taking a pause, right? This is a pause that comes after a very directional move, right? No different. We call this a pregnant pause sometimes. No different than this, right? Price action rallied down, took a little bit of a breather, and then decided to continue on its way. Now, I thought we can see the same thing. Why? We talked about flag patterns and whatnot yesterday about kind of which I like, which I don't like, which I plan on adding, all that fun stuff, right? Low and tight flag, we already know that's a powerful sign for a continuation. It's not the greatest location, right? There's a good and a bad, right? The good is that we've just violated this major period of consolidation. This is essentially, or what I was projecting, was that this was essentially going to be the inverse of this, right? This move up, consolidation like that, and then rocket ships to the moon, baby. So the fact that we cleared this, we didn't consolidate at this level, we cleared it first, was a positive sign, because then I can do the whole identify, lower, 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 close, all that fun stuff, directional bias, right? Now we do have this inside level of structure. So this isn't the greatest. We're not in no man's land, but we know outside, or I should ask you this, which structure is more important, outside structure or inside structure? If you're not sure if outside structure or inside structure is, just let me know, and I can explain it for you. Outside structure. Chris is, how dare you, Chris? Get this man out the room. How dare you? How dare you ask a novice question like that? You ask me to explain. What do you want to learn? Go to the naughty corner. Give this man some coal. So you'll see this, Chris, as you go through, what is it, Foundation 2? I believe it is. You should feel sad and shamed. Yeah. You'll see it in, yeah, you're in Cornerstone, so you got some time to go. You'll see it in Foundation 2. But basically, outside structure is your most recent outside returns. So previous levels of structure that have not been violated, right? So we look at this, if we look at the ebbs and flows, I'm going to just delete everything real quick. You guys get a little bit of a lesson here. We look at the ebbs and flows of price, right? Boom, swing low to swing high, right? Blah, 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 all that fun stuff, right? Has this level been violated yet, or prior to this break, right? These are outside levels of structure. They have not been violated. This level right here, this inside level, this has been violated. So it's not that it's unimportant. It's just less important because we know how we identify trend. We know that the violation of the outside return gives us a very significant prediction, right? When we have a violation of the outside return, we know that that means something very specific. So again, I don't want you guys saying this is not important. Don't ignore it. These are really good levels of structure as well. But if we had to rate them on a level of importance, the outside ones are going to be more important. So it was more important that we broke this level than the fact that we're holding at this level. So I thought we could return to our previous or our next outside level of structure, right? This one has been violated up here. The next one is down here. So I saw this consolidation. I said, ooh, consolidation down here. I know what that looks like when I go down to a lower time frame, go to my fast lane. And at the time, and we could still see this, don't get me wrong. At the time, it looked like a double bottom. Or it was a double bottom. Actually, it doesn't look like it. This is technically a double bottom. We did this. We did this at the time of my analysis this morning. We were trading right up here, and we were holding with these two candles. And just predicting ahead, I said, you know what? If we continue to see some consolidation, and we still can, if we can continue to see some consolidation, we may see a low and tight flag. We can see a break to the downside. If we do have that break to the downside, we have a massive amount of room. Now, on the other hand, right, if you're looking from a bullish perspective, what stands out here from a bullish perspective? Because there is an opportunity here as well. Yep, a 2618. We know that after a double bottom, if you're taking a more conservative approach or you just miss it, comes a 2618, which would be the same thing, a violation to the upside. Although we'd have to move this line up a little bit now. A violation to the upside, a retest, and then a move up. Now, the one question you have to ask yourself, the fast lane, yep. The one question you have to ask yourself about the 2618 is, right, because we're not trading the what, we're trading the where. I always say the what is not as important as the where. So a 2618 is great, but it's only great within our overall analysis, right? So the question is, does this 2618 have room to profit, right? We do have a level of structure up here. This is our most recent level of structure. Let's call it 185, right above 185.50s. But keep in mind, we also have this bad boy right here, this level of consolidation. What do you guys think? Does this consolidation scare you out of the 2618? Or are you like, nah, I'm good, baby? Tom says not worth it. Rain says not worth it to me. There's no wrong or right answer, guys. So don't feel shy or shameful. Don't feel shameful like Chris for asking that question. Every time I start the session, I say, guys, there's no such thing as a dumb question. Way to prove me wrong, Chris. By the way, I'm watching Canada Yen from yesterday, another Canadian pair. If I can get this over real quick. On the range bar chart, look at these. Look how many chores we had in a row here, guys. Sheesh. You get a couple losers up here, and then the last 1, 2, 3, 4, 5, spanking it. My gosh, look at that. Yeah. But yeah, so obviously if that level of structure bothers you, if you're like, hey, you know what, I don't think we're going to crash past that ceiling or crash through that ceiling, then it's just a non-trade. You don't have to do anything about it. It's just a non-trade, right? Your directional bias was bearish. You don't have a bearish signal. There's no need to force something to happen. You don't need to force yourself to trade. No, I'm not doing automated trading. I'm doing discretionary trading. I trust my eyes over everything. I trust my eyes. So you don't need to, although the thing I just showed you could be automated. But you don't need to force it to happen. However, if you are looking for a 2618, I would just say this, right? I would wait for a break of this upper line first. So instead of, we technically have the break right here, right? So if we get a retracement, I would look for a break of this upper line and then look for that retracement. Now, with that being said, right? So nothing major has changed with my bearish prediction either, right? I'm still looking for a bearish move. I still think we can see a bearish move. It's just going to come in a different way. And this is why, again, going back to that foundation course, right? I tried to, the biggest goal I want to accomplish in that, aside from like talking about there is no such thing as trend, was to get you guys to understand that we can have all these fancy names for setups, but it's not the name of the setup that matters, because there are only really 3 things the market does, right? Do you guys remember what those 3 things are? I'm not saying you don't need to know the setups. That's important. They all have their uniqueness to them. What are the 3 moves that the market makes? Not up, down, sideways. I'm talking about like trade types. But the market does only do 3 things. It moves up, down, and sideways. That is 100% true. Right? Reversal, breakout, and pullback. Right? So think about it like this. Let's pretend that this low and tight flag was going to form. And again, it still could form, right? But let's pretend it was going to form. If you were a trader looking to take advantage of this low and tight flag, again, same way as our previous one here, and we can actually use this as a perfect example as well. This is a high and tight flag. And for you guys watching on YouTube, I know you're shooting an idea. Sorry for this stream. We're not doing requests. This is kind of you're getting an inside look at my live trading room. So I'm showing you one trading opportunity for today, and then I'm kicking you guys out, and we'll go on to watch the others. So you can hop in the live room if you want. You can wait for the weekend video where I'll do requests, but just not doing any requests on this one. So we're looking at this move right here, right? So what's one way to take advantage of a breakout or of this breakout pattern, right? You can trade the breakout. Another way is you can trade the pullback, right? And then reversal trades would be more of a counter trend, right? So if we're looking at this as a low and tight flag, one way you can take advantage of it is obviously positioning yourself before the breakout. Another way is during the breakout, so like a sell stop. Another way is the pullback. And if you're looking for a pullback, you first need a violation of the lows, right? And then a pullback, and then that's your opportunity to get in short, right? This level of structure is going to be important no matter what. So even if price action ends up 26.18ing or coming back to this level of structure, right? Even if this happens, and then we end up crashing down and violating these lows, your original trading opportunity is still at play. Does that make sense? Hey, welcome guys. Yeah. Your original trading opportunity is still at play for the short, because it's still a pullback opportunity. It just comes in a different way. So that's why it's important to know that. Who cares what it's called? Again, I don't want to say who cares. It does matter. They leave clues, but you don't need to throw this trading opportunity away. So two opportunities there. Again, started off as what I thought this morning was going to be a low and tight flag. Doubt that's going to happen, but a good lesson on morphing analysis, not giving up on your trade. And I can tell you what, if you're going to be in this game, we talked earlier about not falling in love with your setup. This is why it's important to understand technical analysis. This is why it's important to know different ways. We call it having different strikes in the market, because our live room veterans, they can tell you that how often does a trade play out perfectly? Not too often, right? Not too often. Many times you're going to have a setup. It may not give you the first strike or the fairy tale entry. You may have to wait for a secondary reason to get involved. And there's no problem with that. But again, that's the difference between the pros and the Joes, right? The pros have different protocols where it's like, okay, this didn't work. Now I look for this. Okay, that didn't work. Then I look for this. They don't give up on it because the opportunity is still there. It just may come in a different look. Whereas someone that doesn't have a strategy, someone that doesn't have different ways to attack a market, what do you think they're going to do? If that fairy tale way doesn't come at once, do they stick with it or do they give up and go hunting for something else? Hey, Billy. They go hunting for something else and they can miss a very good opportunity. So, good stuff. Any questions for you guys? I always say this is going to be a short one, and then I get to rambling and it gets really long, 25 minutes later. Yeah, other investment product or strategy. Yeah. And typically, Rain, which now it's going to confuse me because I thought Rain was Ryan yesterday and now Rain's here. And, right. Typically, they're going to go with emotional baggage as well, right? Because if you're all pissed off because you missed the perfect trading opportunity and you didn't miss it, but it didn't, or maybe you missed it, but maybe it just didn't give you what you need. Now you're all fired up and emotional, and now you're heading to that next investment product, right? With all that baggage. Again, it's like it reminds me of old school me at the casino where I go to the blackjack table, I get absolutely destroyed, right? And then I head over to the craps table to try to make it back. Oh, the odds are in my favor at the craps table, right? And then I get out my game plan. Yeah, it turns out crap. Yep, there is. That was perfect. Someone on the TradingView chat just said there is always tomorrow. No need to force yourself. Yep, always trade when it's stupid clear. And it's simple words, beautiful words, by the way. Simple words, but not enough people understand it. Not enough people understand because it sounds corny. Everyone wants to trade because you want to make as much money as you can, as fast as you can. It's really about being patient. Less is really more. That's a great lesson for life as well. But less is so more. It's not about taking. It's not about the quantity of the opportunities you take. It's about the quality. If not, you're just wasting your money. Yep. If it is not a clear grade A setup, my trading mentor always told me this. He said, you want to take your best trades, right? He said, and this is probably a bad way of looking at it, but the analogy makes sense. He says, I only want to take the trades where there is a bag of money sitting on the floor that says, take me, I'm free. Now, again, not the best analogy in hindsight because we don't want to, nothing's a guaranteed victory. I've learned I grew up in a rough area. So it's like you don't touch random bags of money. They're probably drug money and someone's going to come looking for it. And you end up, getting shot or something. So, not a great analogy, but you guys get the point. You take the ones where it's a free money, where it's obvious. It's stinking obvious. And by obvious, you mean it meets your plan. It meets your plan. It said being right is most important. I would say this, being right in your process is most important. I don't think being right in trading is important at all. Because we can't judge ourselves off right or wrong because the market doesn't really care. We can have the best setup in the world and it could still lose. But being right in our process, I would just shift it a little bit to that. I think that's important. Being right as far as we took a grade A trade. We did everything we were supposed to do the way we were supposed to do it. Because if you've done your homework, your back testing, right? Your market research, if you're an entrepreneur in any other type of deal, you know that over time, that's what's going to bring the money in. See, now we're disagreeing. Technical analysis isn't enough. You must feel the market. I'm reading some of the comments on TradingView. I disagree with that, but it depends on what you mean by feel the market. Now, you never want to trade off your feelings. You want to trade off your technical analysis. That's your proven thing. Now, if by feel the market you're referring to intuition, I do think intuition is a real thing. Intuition is earned. It's not given. You can't be given intuition. Intuition has to be earned. How is intuition earned, guys? There's only one way. Intuition is 100% real. That's the professional feel. But how is intuition earned? Rain says repeated execution. I'll get back to the advanced pattern question later. Reading of charts. There's one word I'm looking for. One word I'm looking for. Well, how the market feels is that's your technical analysis. Technical analysis will show you exactly how the market feels. There we go. Good job, doctor. Experience. Now, experience can come from back testing. It can come from time on the chart. It comes in a lot of ways. This is why the number one thing we want to do is gain experience. This is why time on the chart is so important. It's the same thing as this. I coach track, but any sports, the more you practice, the better you'll get. Right? Is there anything, right? So intuition just isn't time, right? We can have someone that trades for years, right? If you trade for years, but you practice once a month on the charts, you're probably still, your learning curve is what I was about to say. You're probably still going to suck, right? But your learning curve is going to be a lot slower. So someone that has traded for 6 months but practices 10 hours a day, like I did back in the day when I was unemployed and had nothing better to do, you're going to gain that experience and gain that intuition a lot more than someone who has practiced 1 hour a month for 10 years. But intuition is gained through experience. And but it's still not enough to trade off of intuition. What you need to do is you need to transform that intuition into rules. So what we always talk about here in a live room is we want to identify what that intuition is, right? Because intuition is something that's technically based, right? It is a feel, right? It's a feel, it's an idea, it's a hunch, but that hunch is based off something, right? It's kind of like deja vu, right? Deja vu just isn't random. It's your mind putting together pieces of things that have happened before, like memories, that your experiences, or it's the multiverse, but we'll save that rant with parallel universes for another time because that's going to take a whole nother hour. Don't get me started on deja vu and the multiverse and parallel universes. Oh my gosh, quantum physics. Ooh. But it's based off something. So what we want to do with our intuition in the market is when Orsi has intuition where she's like, Akil, every time I see this inside bar, like I know we're going to break to the upside. I know it. Well, how do you know it, Orsi? I can't just put my finger on it. What Orsi then needs to do is Orsi needs to go back to the charts and research. She knows what she wants to look at. She needs to go through her charts, look for the specific thing, and then find out what the clues are. And all of a sudden, Orsi says, well, you know what? What I notice is that this inside bar that I'm looking at, it's an inside bar at the top of a trend with a directional bias. It completes in the upper third of the previous mother bar. And now she can backtest that. She's got a theory, a hypothesis, right? Yeah, it's a big word. I'm not good for big words. I try. And now she can test it. Yeah, I got it. Now she can test it. And now once she tests it, now she's got statistical data to back it up. She can make any tweaks that she wants, and then she can add it to her plan. And boom, something that was intuition now turned into something that was testable, verifiable, and repeatable. See how it works? So that's how you evolve as a trader. That's how you continue to grow, right? You don't just do the same thing the same way. Because like I said, you do have to get a feel for the market. The market conditions change. What I was trading back in 2009 is completely different. This is a completely different game. If I were doing the same things I were in 2009, I would not be consistently profitable. I can be honest in telling you that. If I didn't change at all, it would not happen because these markets are completely different. So that experience and that feel for things changing, that is important, yeah. But I just want to clarify that up so we don't. And I know you didn't mean it that way, but some people when they hear feel, that's an excuse. Like, oh, I can trade off my feelings. Yeah. Like, no, you can't. You have to be able to quantify. Example today, the market is still worried about Omicron. I do day trading, so I must see what is going on. But you are right, yeah, yeah. But also, the market's always worried about something. If it's not, the market's not going to move. So, but it's still our technical. We want to understand the lay of the land, yes, but it's our technical bias is going to tell you what the market feels, right? We can say that the market is still worried about Omicron, right? That sounds like a Transformer movie every time I say it. Like waiting for like Optimus Prime to come out. But the question is, okay, we understand that we're concerned about Omicron, but how does the market feel about it? Is it fearful of it? We talked about this earlier, right? We talked about risk on, risk off in the pound, right? Is it macaron? Is it fearful? Are fears subsiding? What's going to tell us that? There's one thing that tells us how the market is feeling. I don't know why I'm swinging two fingers in the air, but there's one thing. And I guess I didn't want to wag it like I'm saying no. What's the one thing that can tell us how the market feels at any given time? Because the price chart. Yep, price. Yep. Because price is a visual representation of all the actions taken by the participants in the market. So yeah, we definitely want to understand the lay of the land, what's happening, and then we always want to go back to our technicals to see, okay, well, what is the reaction? Like yesterday's Canada news, which killed my home run trade, which had a poor reaction. It shouldn't have had a poor reaction. Mad about that. It only had a poor reaction on the single pair I was trading. No other pair did anything else except for that one pair. Stupid Aussie. Man, that's a great first session. You guys enjoyed that? We got a lot more. First session's not done. Boo, we got a lot more. All right. Chris had nice London today, had more ranting as well. Yeah, nice. All right. People on social, Twitter, Facebook, YouTube, TradingView. I still don't know where I'm broadcasting this thing. I'm kicking you out. No trade of the day tomorrow, no live room.